During times like this, everything seems easy. Prices are going up. It seems like crypto is just a money-making glitch, and Ethereum, of course, is leading that price rally. But the reality is that long-term, there's only a minority of investors that actually make money. And that has something to do with the attention on different asset classes. What you're seeing over here is the search volume for the term crypto over time, over the last 5 years. People tend to be interested in the asset at particular points in time. Unfortunately, those points in time is also when the crypto market cap tends to be very high, right? So this is now all of crypto combined, Bitcoin, Ethereum, and the altcoins. Whenever that is spiking, that's also when the interest in crypto is spiking. And so it's a very bad idea to do what most people are doing, right? Most people buy when prices are high, when attention is high. Very few people look at crypto, look at particular assets, look at Ethereum when the prices are low. We have to be contrarian. We have to buy when nobody else wants to buy. But we can only do this when we've got conviction. This video is about Ethereum, but the concept, how important conviction is, applies to all of crypto. What we see over here is a dollar cost average simulator. So this is a very common approach among the Bitcoin maximalists. Don't try to time the market, just keep on holding and buy regularly into BTC, maybe with $1,000 every single month. And then the volatility becomes our friend, not our enemy. When it goes up and down a lot, it's great because we buy a lot of BTC during the bear market as well. We are contrarian every now and then. And we do not just buy whenever everybody else wants to get into the asset. We also do, at least partially, bets on the asset when nobody is interested in purchasing. And so of course we can have a look at relative valuations. We can try to find out, is Ethereum in the grand scheme of things rather cheap or expensive? What's more important even is, when it is comparatively cheap, is it actually an asset that we can have conviction in? Can we actually buy the dip? Because not every asset is worth buying the dip in, right? There are all kinds of altcoins that just continue dipping. They go down, but it might not be worth to buy the bottom because there might never come a recovery. So it's important to be able to be contrarian when everybody else is giving up, that we've got enough conviction in the asset that we can still buy and we're not giving up. What we're seeing here is the Ethereum dominance, and we actually anticipated this bounce in the middle of April. We were at historically low levels in Ethereum's market cap relative to the rest of crypto, so we tend to bottom at around 7%. We tend to top at around 20%, and we are still rather cheap. I would not be surprised at all if Ethereum was to outperform the rest of crypto by another 40%, potentially even more than 100%. I'm covering ETH regularly on this channel, and we talked about that buying opportunity in April as well. So feel free to subscribe over here. Ethereum also seems to be cheap relative to Bitcoin. So this is now the comparison of the ETH price to the Bitcoin price. We tend to trade in somewhat of a range. And again, we saw our bounce in the middle of April of this year. And there is potential upside versus BTC of almost 300%. Will this happen, or is this just imaginary lines drawn on a random chart? Let's try to find this out in this video. But first, let's have a look at one more relative valuation chart. Ethereum's market cap relative to the altcoin market cap. Because Ethereum and the altcoins, they tend to be very highly correlated. When Ethereum goes up, the altcoins go up as well. When Ethereum goes down, the altcoins go down as well. But when we look at how is capital flowing from Ethereum to the altcoins and from altcoins to the Ethereum, there also seems to be somewhat of a stable trading range. And I do believe there is a good case to be made, and I will tell in a second why, that Ethereum outperforms the altcoins by more than 60% in the next months, potentially even more than that. This top over here is at around 200% outperformance from the current prices. And so let's get into a few fundamental drivers. Why do I think Ethereum has a good chance to outperform the altcoin market as a whole? There is a lot of competition within the altcoin market, right? New projects launch all the time. And it's not just a dilution with more and more projects launching. It's also the dilution within a project that pushes down prices of various altcoins long term. Because here's the thing, with Bitcoin and Ethereum, we've got relatively stable tokenomics. as in the supply of the assets doesn't grow that quickly. Thus, if you've got new investors jumping in, if you've got, for example, Wall Street buying up the asset, this will lead to price increases because there aren't any investors that invested very early on, right? Venture capitalists or the team, etc., that always sells consistently. That's true for Bitcoin and Ethereum, potentially Solana. It's not true though for all of those smaller altcoins. There are even dedicated websites just on that topic. What kind of altcoins get what kind of emission in the future? And this is direct selling pressure. So if there's no new money flowing into the asset, the price will go down. And Ethereum's selling pressure isn't too bad. The tokenomics right now, at least, are even better than for Bitcoin. Bitcoin supply expands because of the staking program, and it shrinks because of the burning, so the usage of the platform. And when all of this is added together in the last 30 days, we saw a supply expansion of Ethereum of 0.7% annualized. For Bitcoin, that's 0.8%. So Ethereum supply is expanding less quickly than Bitcoin supply. So that's one potential reason to be fundamentally bullish on Ethereum, right? When it's an asset that gets used long term, that has its network effects in place. At the same time, the supply doesn't grow as much. When the price is depressed, it might make sense to buy. That's very different to meme coins, for example, right? We get all of those new meme coin launches all the time. And so the question really is, if a meme coin crashes, will it ever recover, or will it just be the next meme coin that ends up rallying? But if you've got an asset that will stay around, like Ethereum, and the supply expansion is no problem, and the number of investors getting into the asset tends to grow, that is long-term bullish for the price. Here's another reason to have long-term bullish conviction about Ethereum. This is the total value locked over time. So how much capital in all of decentralized finance is in various blockchains? And Ethereum is dominating that. 57% of all of DeFi capital is on Ethereum. Solana has only 7%. And of course, it's not just the current state that matters. What also matters is the future development. And there is a lot of growth of decentralized finance, especially in the stablecoin market. This is the stablecoin market cap over time. This tends to go up over the years. We did have a bear market that started here with the Terra Luna collapse. Afterwards, also FTX went belly up. But since October of 2023, money is flowing into crypto again. Now there's more than $250 billion in stablecoins in crypto. And again, Ethereum is benefiting directly from that. This is the market share of Ethereum of the stablecoins. So here's all of DeFi and here are the stablecoins. It doesn't look that different. How quickly is that going up? Let's say for the last year. We had been at $162, $163 billion in market cap 1 year ago. Now we are at $258 billion. So that's growth of 58% in the span of just 12 months. Now, this might look all a bit complicated, right? The stablecoin market cap and the Ethereum dominance, etc. What does this actually have to do with the price? The reason why it matters is because those are details around supply and demand. And this is in the end all what price development is about. How will the demand, how will the supply develop over time? And since Ethereum is a proof of stake protocol, right? It moved from proof of work to proof of stake. The number of staked Ethereum, of course, matters as well. As more and more Ethereum gets staked in the protocol, that Ethereum is not liquid anymore. And it's not active sell pressure. We did have a bit of a slowdown of staking at the end of 2024 and the beginning of this year, but now this is picking up again. More and more ETH is getting locked up, taken out of liquid supply, thus supporting the Ethereum price. Really, I think there are three fundamentally different assets within crypto. So Bitcoin, Ethereum, and Solana are completely distinct from all of the rest of the altcoin. Because those three assets all have in common that they are now used for accumulation. They're used for long-term holding, for storage of value. They're not necessarily used for short-term speculation anymore. So have a look at the number of active addresses on the Ethereum chain. This actually did not grow in the last 3 years. That's the purple line here, right? The price fluctuated, the price did go up, but the number of active addresses over time didn't really go up for Ethereum. Clearly, the dynamics have changed. Clearly, the demand and supply drivers have changed. What we see over here is Bitcoin. It's not Ethereum. How much Bitcoin is held in the Bitcoin ETFs? So how much is Wall Street buying BTC? The number of active addresses on the Bitcoin network is also not growing, but the number of Bitcoin that's held by Wall Street is very constantly constantly growing. This is a chart that starts in 2024, and we went from 600k Bitcoin to now 1.2 million Bitcoin. It doubled during that time. Here's the same chart for Ethereum. At the beginning, it wasn't that clear whether or not Ethereum will get long-term accumulation by the Wall Street investor. But recently, the situation starts to clear up again, right? We are at an all-time high of the Ethereum that's held by the ETFs because now the grayscale selling has finally slowed down. This was the headwind over all of those months before. That headwind is gone. And that helps the balance creeping up. That, of course, then also helps the Ethereum price. Here are the daily flows into the Ethereum ETFs. The last weeks were pretty much always just positive. If we annualize the recent supply absorption, we get to a purchasing rate through the ETFs for Ethereum of 3.4%. This is very similar to what we see for Bitcoin. That's 3.6%. So really, Ethereum is moving into a similar realm to where Bitcoin currently is. It gets accumulated by the long-term investor, and the usage itself isn't even that important anymore. If the people that buy Ethereum just buy it in order to hold it over the long term, then the price naturally will stabilize at higher and higher levels long term. I'm not getting tired to mention this. This is the performance of the smaller altcoins in the last year. Pretty much everything went down, while Bitcoin performed very well. Here, just as a reminder, right? Bitcoin in the last year doubled in price. How many of the smaller and more risky altcoins were able to compensate that risk, to actually outperform Bitcoin? This is 100 tokens here on the screen. We've got this outperformer over here. We've got this outperformer over here. All the rest underperformed Bitcoin in the last year. This is 100 assets, so 98 out of 100 assets did worse than Bitcoin. Now, there are two potential ways to deal with this. We could either just become Bitcoin maximalists. We just buy Bitcoin, maybe Ethereum and Solana. That's about it, and we forget about all of those other altcoins. But there's also a second way, and that is to take advantage of this mispricing. In the last 3.5 years, the market cap of the altcoins underperformed Bitcoin by 77%. And the reality is even worse than what this chart here implies, because again, this is a comparison of market caps. The Bitcoin market cap versus the market cap of the altcoins. But when we invest into an altcoin, we don't get the performance of the market cap. We get the performance of the price, and there can be a big difference. Usually there is a big difference. This is WorldCoin. This is the market cap of WorldCoin over time. And this is actually not that far away from the all-time high. But compare this to the price development of WorldCoin during the same time. This is very far away from the all-time high. And this is in the end what the retail investor is getting. Why is there this discrepancy? It's because of the tokenomics, right? It's more and more tokens that hit the market. It's the insiders that are cashing out. It's the early investors, the VCs that are cashing out. It's the team that's cashing out. So the teams get more and more tokens allocated towards their wallet, right? They get vesting unlocks, and then those unlocks get sold. So this is the WorldCoin supply over time, right? It moved from 500 million to currently 3.6 billion, more than a 7x in supply. That's what's causing this massive difference. That's why investing in the smaller altcoins is such a bad idea long term. That's why 98% of the altcoins did worse than Bitcoin in the last year. And this is a structural problem of the altcoin market, right? Everybody can launch an altcoin. Everybody can set up any kind of vesting unlock. The supply can grow however it wants. There's no laws around this. There's no regulation around this. And so, of course, the average retail investor gets milked over time. The altcoin market needs at least around 500 million, potentially more than that, maybe 600 million in US dollar inflows every single week in order to keep the prices just stable, right? This is the unlocks across the tracked tokens on this website. Without the demand coming into the altcoin market at that rate, we continue to see this kind of development because again, there's just constant sell pressure happening. And so let's say our thesis is that this structure will not change, right? That the VCs will continue to dump on the retail investor, that the insiders will continue to cash out, that most small altcoins will continue to do worse than Bitcoin, Ethereum, and Solana. We could just stay away from the altcoin market as a whole, or we could try to make money from that. And that's what I'm personally doing. I try to take advantage of this opportunity. I'm trading in this way already for more than 4 years. And what we're seeing over here in black, that's my performance that I made compared to if I had just dollar cost averaged into Bitcoin. So dollar cost averaging is in light gray, and the black line, that's what I made. And this is just monthly data out of my personal Excel sheet. It's close to 4 years of data now. So the TLDR is that I bet on relative valuations. So I bet on Bitcoin, Ethereum, Solana going up, and I bet on all of those crappy small altcoins to go down, relatively speaking. I do 2 positions at the same time. Long, one thing, short, one thing. So in the end, the position is delta neutral. It's not impacted by the overall market that much. I used to do this with borrowing and lending platforms like Aave and Venus Finance. Now, recently, in the last 2.5 months, I moved this to perpetual futures. And that experiment is going very well. So here's the development over time. I started with 40K in balance and that moved to 60K. So 50% of return in roughly 2.5 months. And there wasn't too much volatility along the way while making those gains. I am sharing my own trades as well. So that example of WorldCoin, right? I actually made money from that. So I posted how I was betting on falling prices of WorldCoin, how the tokenomics of WorldCoin aren't that great, and doing a relative valuation bet might make a lot of sense. And so that was when the price was over here, and of course the rest is history. WorldCoin relative to Ethereum went down by 40%. And if you then have smart leverage, right? Leverage that is limited in risk because of the use of stop losses, etc., we can make a lot of gains. So this is then when the community copy traded that particular position. Yeah, I always like these kinds of comments, right? Premium has already paid for itself, etc. But the community does not just copy trade me, right? There's all kinds of opportunities, and those opportunities are shared in the different chats as well. And so there are 2 ways to go about this, right? Either you just learn it yourself, you do the active trading, you figure out what kind of altcoins are incredibly inflationary in nature, which kind of altcoins tend to go down versus Bitcoin the fastest, then exchange the ideas with the community and open up the positions yourself. So that's the best approach if you don't yet have that much capital, but you do have some time. So there are 2 essential videos for that. There is this one here, using perpetual futures on Hyperliquid to bet on relative valuations. And there's this video over here, risk management with relative valuation bets on Hyperliquid. So there is 2 tutorial videos among a database of all kinds of exclusive content. And so that's the do-it-yourself approach, right? That's currently $125 per month. And if you don't like premium, just message me within the first week and I'll refund you 100%, no questions asked. But if you're among the people that have a lot of capital, but not that much more time, that maybe have to focus on a high-paying job or on a business, and simply just want to allocate towards that strategy, then you can also just automatically copy trade me. This is still somewhat experimental, right? We just started this 2.5 months ago, but that's reserved to the people that subscribe to the annual membership, where, by the way, you also get savings of $250 per year. You can start out with monthly and then upgrade to yearly later, or if you don't want to learn from the very beginning, just start out with yearly, that's fine too. You'll get all the instructions on how to deposit to the capital pool, and then all the trades that I make will automatically reflect towards your capital base as well. Of course, I don't have the guarantee that we continue to make money, but in general, I do believe that the odds are on our side. Again, we make money when the altcoins continue to do worse than Bitcoin and Ethereum and Solana. And I do believe that's a structural problem with the market. There's constant sell pressure across the board, and some assets are worse than others. And that's where the real outperformance is, right? It's not in the common strategies trying to find the next 100x altcoin, right? This is how everybody gets burned. This is how everybody loses their funds. Please don't make that mistake. Please do something different to the masses, right? If you do the same things as the masses do, then you get the same return as everybody else. And again, returns are very much concentrated towards just a few players in the market. The vast majority of people loses, especially trying to find the next 10 or 100x meme coin. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you directly to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.